Stock sold off hard yesterday, and mortgage rates, they didn't drop. If you've been waiting for a sell-off to bring your rate down, yesterday showed you why that doesn't always work. I told you to watch core, not headline. Headline ran hot as expected, and the highest in 3 years, almost entirely from energy. Core came in softer than expected. So here's the puzzle. The underlying inflation read wasn't even that bad, and stocks were falling. Both of those usually help your rate. Why didn't rates move? This is the mechanic. It's confusing everybody. When stocks fall because investors fear slower growth, money runs into treasuries typically. That pushes yields down, mortgage rates follow. A bad day for stocks, a lot of times, is usually a good day for rates. Yesterday, that broke. Stocks dropped hard. The Dow off more than 800 points, and the bond market barely moved. The 10-year actually ticked up. Because this sell-off isn't really about growth, it's colliding with energy. Oil jumped again on the conflict in Iran, increased escalation from our president. And when inflation is the worry, bonds don't get the safety bid because inflation eats away at a bond's fixed payment. Rates stayed sticky even as stocks fell. Two things land today. PPI, the wholesale inflation read, hits in the morning. And after the close tonight, the biggest IPO in history gets priced. SpaceX, again, trading tomorrow at a $1.75 trillion valuation. Marquee IPO dropping to a market that's still nervous about inflation. It's going to be a really good test of how much risk appetite is left. So if you're waiting on rates, watch the 10-year, not the stock market. Right now, they're telling two different stories. Lock or flow depends on your file and how quick your timeline is. That's definitely a conversation to have. Try to track all of it into Friday. Try to provide as much information. Hopefully it's a benefit to you. Links in the bio if you want to learn more. Fall less into the SpaceX IPO.